here at MarketStream.live. First, before we start, I just personally want to thank all those that are currently serving and have served our country here on Veterans Day. A heartfelt thank you. You are truly America's heroes, and it's one heck of a sacrifice, so thank you. My name is Joseph Cusick. I am with the Cusick Group, securities offered by MoneyBlock, and we're here today at Strategy Now to talk about what's going on with the broad market here in the midday. We'll talk about where we see not only the action happening in a broad-based index perspective, but we'll also see where the relative strength and weakness is into the midday, give you some context in areas where you could see where strategically there are institutions and retail traders trading, picking up and deploying their objectives, deploying their thesis about what's going on with the market. So right now, what do we see? We see a broad market that is split. We have the NASDAQ basically waffling around little red, little green, basically down about less than 0.1%, around 1 point on the NASDAQ futures at 47.36. You have the S&P 500. Taking a look at the S&P futures, they're down about 9 at 21.58. And you got the Dow Jones Industrial Average down about 41 or around 0.2%. Where the divergence come in, because basically I said the three main large cap indices are all down, it's the Russell 2000 of the small caps. They've been outperforming all of their large cap brethren. The Russell right now is trading at 21, let's see, it looks like around 21.27, up about 19 points or around 1.5%. And the action has been to the upside since the get-go. It looks like these small cap, higher beta, domestically centric names are starting to gain some traction, especially as the market starts to think through where do we need to be positioning. The action is coming on a higher volume. Now, what's notable is the volume you're not seeing is going to be in the bond markets. As I've noted, it is Veterans Day. The bond markets, the pit trade is actually closed. So that's why you see that the bond volume is about 1/5. But when you look at the New York Stock Exchange, the average volume right now in the midday is around 342 million shares. About 492 million shares have traded. On the NASDAQ, average is right around 784 million shares in the midday. It's 957 million today. You have also mixed new highs and lows. Where the New York Stock Exchange, it's basically flat to highs versus advancers for decliners or highs and lows. And the NASDAQ, you actually have actually a mixed bag too. Not really. There are more highs than lows, but some of those lows are in some of the largest capitalized stocks in that index. Most notable, the Facebooks, Googles of the world. Taking a look at the fixed income markets, the sell-off in the bond prices has been pretty dramatic. We've seen that the long end of the curve, the 10-year and the 30 years, you've basically seen about 10 points come out of the 30-year, and you've seen the 10-year note, the yield on it basically jump 38 basis points from the close when we talked on last Friday. So it's been impressive moves in the bonds. It has been bearish on bond pricing, yields up to the levels that we haven't seen them in quite some time. It is a little bit slow in the bond market, so we're going to see if maybe the 155 level on the long end of the bond is a price point where you're going to start to see some stability. We're only going to know that until Monday morning when the markets resume normal trading. At this juncture, though, when you look at the broad-based market, some of the areas that are going to be impacted by this rate influence and these massive fluctuations in bond prices and yields are going to be rate-sensitive stocks like utilities. Now, utilities have bounced back quite well today, up about 0.4%. Real estate also has bounced back nicely, up 0.4% as a group. But the heavily weighted healthcare sector hasn't bounced back. It is down about 1.5%, and financials actually are pulling back a little bit in spite of the incredible rate increase as far as yield, both here domestically and you're starting to see it on a global fashion. Financials are down about 0.1% as a group right now, and they're narrowing their weekly gains, but they've had some impressive gains since the election of President-elect Trump. The areas that we see relative strength coming into the noon hour or 1:30 or midday right now is that you see strategists starting to deploy a little bit more into areas like rare earth metals. You could take a look at an ETF to get an idea of what's going on there. REMX is one that I watch. It's up about 3%. The Russell 2000. Small caps have gained favor. They are the leaders right now. That is a positive for a general market bull. Though, as I've said over the weeks, that's your canary in the coal mine. If things start to get ugly and the usually higher beta domestically centric stocks would be leading to the downside, they're not. They're actually showing leadership. If you take a look at the Russell futures, if you don't have access to them, take a look at the IWM. That's the ETF that tracks the Russell 2000, up about 2.1%. You can see that the components there are really moving to the upside. We're going to see if that continues and if that is actually a catalyst for the bulls going into next week and the remainder of today's trading day. Semis. Semis have been mixed, but boy, are they up today, and they're up big. SMH is the ETF. It's up about 1.7%. One more most notable is NVIDIA. We talked about NVIDIA last night in Tech Talk, where it had earnings. It had a great earnings announcement, and the stock is up about $18 or around 27%. That has been one of the leaders today in tech. That has raised semis up and SMH as a general sector ETF up to the upside, and you see some interest there, especially now that you see that the proposal that Clinton would have had would be potentially new capital gains taxes. Well, President-elect Trump is looking to reduce taxes and tax implications. He's trying to get growth and growth initiatives back on the table. We're going to see how that plays out. Where we have seen some relative weakness, though, is in the precious metals. Silver right now, you can take a look at SLW, or I look at SIL, down about 6.7%, and gold miners and gold. Gold miners specifically down. GDX is the ETF that tracks the miners, down about 5.4%. Gold has been down. It's now below that 1260, getting that 1250, 1240 level. You see some challenges there for gold. We're going to wait and see how that plays out. It's definitely the safe haven aspects of it over the last 48 hours, 72 hours have worn off. Now we're going to look at the inflational components. With the strength in the dollar, it makes sense that these particular precious metals start to pull back. But if we continue to see that the semiconductor space is increasing to the upside, watch silver. Silver could be a benefactor to the upside of that. They do use silver in the production of semiconductors. This is something interesting, and as well as chips. Let's keep an eye on that sector as well. With the current weakness that we're seeing in silver, there could be a little bit of a mixed bag here, and we want to watch that. All right, that's it for Strategy Now. Come back at 3:30 Eastern Time, where we're going to be doing Tech Talk, where we're going to cover charts and option pricing, give you more transparency into what's going on in these markets. Till then, have a great rest of the trading day, and come back and join us at MarketStream.live this afternoon. Take care and have a great day.